You have questions on a dividend reinvestment program, what it is, how it works. A dividend reinvestment program is sometimes called a DRIP. I know, kind of a funny name, isn't it? Hi, Bob Jennings here, trying to explain the dividend reinvestment program to you. A dividend reinvestment program is a program established by a company that you own stock in. Most companies pay a dividend 4 times a year, quarterly. And that dividend quite often is a very small check. The advantage of a dividend reinvestment program is, rather than them sending you a small check every quarter, you tell them, hey, don't send me the check, just buy more stock in my name. Now, what are the advantages of the dividend reinvestment program? There are a number of them. Advantage number 1 is you get to utilize a feature of investing called dollar cost averaging. What that means is every quarter you're buying more stock. Some of the stock will be expensive, some of it will be inexpensive, but over a period of time, it kind of minimizes the effects of down markets. It's just an excellent way to invest. Second, the cost of a dividend reinvestment program is very minor. The companies quite often charge a nominal fee to participate, very minor, 0.1%, something like that. Much cheaper than you could actually buy stock in. Third, it allows you to invest relatively small amounts of money in a stock that, you wouldn't actually send that company a check. Fourth, if you're getting a dividend check for $30, what difference in your life is that going to make? But if you take 4 checks of $30 and you invest that and reinvest it in the company over time, you will accumulate a substantial amount of money over time. So the dividend reinvestment program says this: the company, rather than sending you a check, will actually take the money and buy stock in their own company at a great discount for you. Most of these companies also allow you to have an additional cash amount that you may invest directly with the company. You don't have to pay any commissions or brokerage fees on it. This is called a share purchase plan, sometimes an SPP, where you can make a direct cash investment in addition to reinvesting your stock dividends. Are you excited so far? I hope so. I love the dividend reinvestment program. I'll give you an example. My son, who is 22 years old, when he was born 22 years ago, I invested $500 in Coca-Cola stock, which 22 years ago was a pretty good sum of money for me. I didn't have $500, but I invested $500 in Coca-Cola stock, and I immediately invested in their dividend reinvestment program. Today, 22 years later, there's about 170 shares of Coca-Cola stock in his account that's accumulated over that 20-year period of time. Admittedly, I've sent a little extra money in once or twice as well. Are there any negatives? There is one big one and one minor one. The big one, you still got to pay tax on this money. Now you're thinking, but Bob, I didn't get it. Well, in essence, you did get the money. It came to you and you sent it right back to the company, so you pay tax on dividend reinvestments even though you didn't actually receive the cash. All right? Number 2, you have to keep track of this. One of the things that you have to prove is what you've reinvested in the company over a period of time. You need to keep your year-end statements from these companies that shows all 4 quarters for the year, and you need to keep that every year while you own stock in the company, because someday you're going to sell that stock and you have to know what the cost was to figure out if you have a profit or loss. Dividend reinvestment programs, you can tell, I love them. I think they're one of the greatest tools out there. Advantages: low cost, dollar cost averaging, ability to reinvest amounts that maybe you wouldn't normally do. Only disadvantage is you do have to pay tax on what you're reinvesting. For further information, please visit us at our website at the bottom of the screen, or feel free to call us at our phone number. Bob Jennings, thanking you again for listening.